You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
Welcome back to TWIFO, This Week in Futures Options, the program where the name usually says it all. This is usually where we break down the week that was, and indeed still is, on the futures options trading and trending and analysis and development front. This week, we're going to mix things up a little bit. My name, of course, Mark Longo from the old OptionsInsider.com, and as well as the old network. And if you say, hey, that guy sounds a little bit different this week, you're right, I do. I'm not coming at you from our studio in Chicago. No, I'm coming at you from our on-the-road traveling studio here in scenic and sunny Miami, Florida, for the 2019 Options Industry Conference. We have a slate of great guests lined up in here, so hopefully you guys have been enjoying the slew of content we'll be sending your way all this week, probably all next week. There's so many. I've been talking for days, listeners, and it's not done yet. Don't worry, because we got another one coming up. Joining me now on the TWIFO program, our old friend, Mr. Russell Rhoads, the Director of Derivatives Research. They're at the Tab Group. Mr. Rhoads, welcome to TWIFO, sir.
Old?
I put friend there too.
Okay.
Seasoned friend.
Seasoned friend. Gristled. I'm kind of gristled. So this has got to be confusing people even more.
Yes, very, very.
Me on
confusing.
Twifo is...
Dogs and cats living together.
Today's Friday, right? I think I've always only spoken to you on Fridays. But no, I'm absolutely thrilled to be here, as always.
It does feel strange, sir. Yeah. So let's keep that strangeness going as we kick it off. We're going to mix things up a little bit. As I mentioned, we're here in the roaming studio here at OIC. So I haven't been glued to my screens. I've been talking to the people. Because the people want me to hear me, Russell, talk to the people for them. So that's what we do here. And that includes, unfortunately, having to talk to you on occasion. But what is it? This is not usually your stomping grounds. What brings you down here to OIC, sir?
Well, I actually got to do a fireside chat with John Davidson.
Pretty warm for a fire. Hopefully they turned it down a little bit.
At some point, I would like to do a fireside chat somewhere that it's not above 80 degrees. It's gotten so old, the continuous comments about fireside chat when we're in the Bahamas and stuff.
I guess AC chat doesn't really have the same ring to it.
No, we got to come. Well, although it was suggested, and I think I am going to do this. I'm bringing my iPad next time, and I'm going to get log on to the YouTube and get one of those fireplace things.
That's better.
And put it on the table between me and whoever I'm having my nice chat with.
That is definitely better.
But it was John Davidson, who has recently become the CEO of the OCC, and
he was in that exact seat 24 hours ago.
Was he? And well, then you will probably agree with me that he's really sharp, knows everything about the business that he needs to know. He was on the board at one time, so even though he's only been at OCC for 2 years, he's got a huge depth of knowledge. And I have never had an easier fireside chat. I basically, if we spoke for the exact, and actually we did speak for the exact 30 minutes that were allocated, I think I talked for a minute and a half.
Yeah, you just wind him up and he goes. It made my job quite easy as a host, and I'm sure yours as well. Just let him go. And
I had, I know this is going to ruin the allure of these things for some people, but you do plan out what you're going to talk about.
It's all off the top of my head, sir.
Well, right now you and I are doing this whole thing off the top of our heads. We really are. And you used to send me emails that I would just ignore because I wanted the spontaneity to come across on the podcast.
You're an improv kind of guy.
I actually did have like little things that I was supposed to make sure he covered, and if he didn't cover everything that he wanted to, I would help him through reprompting. He just basically went down the checklist. He must have what's the memory that you can?
Was it like now I'm blanking on.
See, neither of us have a memory.
I cannot
whatsoever,
recall that type of.
It's like a visual memory or a photographic memory.
Yeah,
there we go. So. If we were live, 42 people would have just tweeted that.
He's been well prompted, well coached to hit his talking points, and he does it. He knows his bits, about clearing, which is what you want in a clearer, right? You want someone who knows the bells and whistles, really knows the inner workings of the machine. By the way, he kind of threw me for a curveball yesterday. I thought I was throwing him one, but he returned the favor to me because I asked him. One of my old saws at a conference like this about things like after hours trading for options. A lot of people, in particular equity options, a lot of people point to OCC. They blame, we can't do it because OCC can't handle it, something like that. They kind of pass the buck to OCC. He said, no, we could do that. In fact, we're upgrading our technology right now. And he said that should be a pretty easy lift once we have that in place for the exchanges. And that kind of blew my mind because that means that excuse now is gone.
Well, did you have Henry Schwartz on?
We did.
Okay, and I know you've been stuck in here, so you haven't been able to see a lot of the presentations. But
I have my own conference, one-on-one in here for 4 days.
You probably got a lot more out of this one. Because you could ask exactly what you want. But during his presentation, and he just does great work, noted that 25 names are like 47% of the volume or something along those lines. I've always said, why don't do two things as far as pre- and post-market trading goes. There are a handful of stocks that trade like water starting at, this is Chicago time, starting at maybe 7:30 Chicago time. That means there is a legitimate market for the market makers that choose to turn the machines on early to actually hedge themselves. And it actually might actually smooth out some of the pre-market volatility if you had option trading as well. Because for one thing, if you've got an option position on and something's going on in a name at 7:30 Chicago time, really the only way you can hedge yourself out is by trying to do something in the stock. So you've only got one liquidity pool at those times. But I've often said we should just use the top names and then kind of like they did with weeklies. But then, maybe also today we're going to keep Tesla options open until 5 because Elon Musk is going to smoke a fatty and report earnings.
Yes,
that was not scripted.
The Tesla pilot, that'd be a perfect Tesla pilot program for this.
But in all seriousness, I always felt like the excuse that was given to me was not OCC, the clearing part. The excuse that was given to me was a lack of liquidity and the underlying
poor customer experience. They don't want to do it because of the lack of liquidity. Yes,
and market makers like working from 829 to 316.
It does seem like there's a bit of a bifurcation on that issue where the retail-facing firms want it. They want it tomorrow because their audience wants it, particularly this time of year. It's earnings season.
Oh gosh,
they want to be able to hedge their Tesla in the after hours and Google, and you can blame them.
Imagine what the percentage of trading would be. During earnings season, it would be incredible.
It would be enormous, and then the institutional facing firms and the exchanges who have to do the heavy lifting behind it, they say, well, it would be a bad customer experience, so we don't want to do it. And I keep pushing back on that. Well, they have zero customer experience now, so that's probably bad. So maybe you could.
I think you could roll it out in a small pilot.
Exactly.
No problem.
Exactly.
But that's easy for you and me to say because it's no work for us.
I know. We just hit the button here on the recorder, and then it happens, and magically in the world. It's amazing the power that we have here, sir. But obviously you're down here at OIC, but you're doing a lot of research, and I know last time you had you on, you were chatting about a lot of your research in the futures options. And I think you're working on some good new stuff too. So catch us up. What have you been up to, sir?
I'm really focusing on different product usage. The one that maybe I'm following the hot market right now, but they also have a volatility index around this, is the oil volatility index.
Never heard of any of it.
Taking a look at the options on futures one, not the OVX. What's the one that you know this better than I do?
OVX on USO,
No, what's the one on the options on futures?
OIV.
Yes. I can't ever remember that ticker. No, you do this. You do this every week. I do this every once in a while.
To have the right ticker.
I've got the numbers. I just couldn't remember the ticker off the top of my head. Well, looking at the OIV, seeing how often they're overpriced, but which is a lot. Looking at what happens when we get volatility spikes, it comes down very, very quickly. So taking that knowledge, taking that history, and turning around and maybe coming up with some consistent strategies that people can do in the options on futures area to harvest that volatility risk premium. It's not just in VIX; it's other places you can get it.
Don't tell my previous guest, Thomas Petterfee, that you just said that. He would be deeply upset. He doesn't want anyone
and I'm afraid of him
harvesting the risk premium.
You don't last that long in this business without taking care of some people.
Yes, there we go. Your words, not mine. But interesting things here. Because you're right. It's funny. You should mention those products actually. Because on the way to the dinner here at this conference last night, I had an in-depth, heated conversation with someone who was just flabbergasted that there was ever a gold VIX and a crude VIX. They couldn't believe it. And then B, that there actually was a future for a little while, for like a week. On the gold one,
it was for more than a week.
Yeah, I know.
And
it seemed like it was only.
They had a volatility panel. Mike Palmer was on it. A couple of other guys were on it. Ben, who used to be at Group One, chaired it.
Simon Ho, guy who's behind Spikes now. Yes.
They talked an awful lot about that. Mike Palmer, I'll tell you, I've never really heard him speak on anything but VIX. But he really does know the whole ecosystem very well. I didn't. There are a lot of guys that show up, trade, don't really know that much about what's going on in their markets. I was really impressed with him yesterday. But they did talk about the previous products at SIBO, and they had time for questions. And I really, if I had been able to text in a question and they wouldn't see who asked it, I would have done this.
I don't know if you want to stand up in that hall and raise your hand.
But my question would have been, do you think they gave up on those things too quickly? That really would have been, do you think maybe they should have waited for it? Because I remember when we had a couple of outlier oil events, and I got a bunch of, what the heck happened to the oil VIX futures? They weren't there anymore. And they kept the Russell around for a little bit longer than they needed to. But the other ones, I feel like I know there's a cost associated with it. I know there's a cost to get people to provide liquidity there. But part of me really feels like it may have succeeded if they'd only done oil and gold and Russell and focused on those, had me write on them a little bit more to make sure people knew that they were out there, but given them more time to work out. VIX futures came out in 2004. It took 5 years.
Yes.
These things take a long time.
It's funny because you're right. When they launched those, I said, "Oh, this is a no-brainer. This is going to be a slam dunk." I mean, gold and volatility, crude and volatility, two great tastes that taste great together. Who doesn't want this? It's going to light it up. And yeah, they never really materialized. And you're right. I mean, maybe you could argue they didn't really. Of course, the number of people who've come on my network since then, who are professionals in this space, who had no idea that those things ever even traded. maybe they were right to shut it down. It seemed like it went under everyone's radar. It's amazing. But you're right. It's especially now, we see it now. People coming into this show, they all want to talk crude. It's like the first one everything wants to talk about, and then they get gold and a few others. But crude is top of mind for everybody. So it would be something to have that listed now and to see it just the way OIV has moved, and to see it is gapping all over the place. And and plus OIV, at least it's on something that's not continually eroding like a USO. You've talked USO before. It has all kinds of issues.
It's tough to. I love using SKU for commodities, and it's really tough to get a handle on USO SKU. You know what I mean? It is. It's hard to gauge what it's telling you. It's not quite the same thing if you're using SKU on the options on the futures.
Have you had any early findings from your research yet in this area? Any interesting takeaways so far?
Oil vol is overpriced more than stock vol. That's really that's OIV is overpriced more often and by a higher magnitude relative to the realized volatility than VIX is relative to realized S&P.
So don't tell Thomas I said this, but we should be harvesting the risk premium in
but not with puts.
Oil. Not with, oh, sorry, in the call side, yeah. Yes. So, harvesting risk premium, yeah, he'll be happy. He doesn't like any selling, so he will not be happy. But yes, but do it on the call side. I say, Thomas, it's in the calls. It's good.
What do we the CME Bitcoin futures? Do we know what the margin is on those at Interactive Brokers? Initially, it was like a 300% loss.
He will only let you go long. So if you short it, you cannot.
And I think it's 100% margin.
Yeah,
which
it is 100%.
Yeah.
That's what it was across the board when they first listed everywhere, because everyone was terrified to touch them.
Well, as they should have been.
Yes, and then
so.
Thomas kept it only to the long side, and probably still 1-to-1. You're correct. I would not be surprised. He seemed a little bit more open on crypto now. He said people should put a little bit of money in it and just forget about it, because it probably will come to nothing. But on the off chance,
that's actually what I'm doing. I'm shoving a couple $100 every paycheck out and spreading it over 4 of them. And so I know that's way off topic for a second.
Oh, we talk crypto here.
I think that's I think that's the way to go.
Until we had the crypto show, this was the crypto home here on the network, and a little bit of ETH, a little bit of Bitcoin, maybe a little Litecoin. Litecoin's been the big percentage gainer on the year. Yep. That's been a nice one. So hopefully you allocated a little bit to that as well. Let's look here. Since we're talking crude, let's pull up a little bit of the old quick strike. Mr. Russell, I'll have to walk you through a little bit of the old quick strike, particularly this dark mode. Nick is very fond.
I just got it, and I need to log in. So you got.
I will tell you all about it.
Somebody needs to teach it.
Coming into showtime here, listeners, we're seeing crude coming off the WTI, of course, coming off the mid 60s highs. It was threatening in the last couple of shows. Now down off about 1.5 handles on the week, or about a little over 2, about 2.5%. A little bit shy of 62 right now, about 61 3/4. Looking at the vol, you mentioned the vol earlier. That's a point we made a lot on the shows. If there are any spikes in crude vol as well, they're usually very short-lived, right? Except for a couple of aberrant periods around like the OPEC decision last year or a year and a half ago. That's when we saw some structural shifts in the volatility and the skew there. But outside of those moments, you see a spike, and it's incredibly short-lived. And so the opportunities to harvest risk premium, I think, are probably few and far between sometimes here, but if you can catch them, they're certainly interesting. Right now, the volatility across the board is actually up a little bit, which maybe shows that maybe shy of the 60 handle, there maybe is a little bit of interest or concern there as we're moving down and getting bid up.
It was really skewed to the upside about a week ago. I haven't had a chance to look at it.
That's what's fun about this show. That's what's fun about these products. It changes. It changes week to week, and you can sit there and say, okay, I have a handle on gold skew this week, right? It's bid to the upside. It's offered to the downside. I got it. And then something happens. You go do something else. You come back a show later. Oh, wait a minute. These puts are incredibly bid. So from a comparison, we always used to do volatility views, and the puts are always bid. The calls are always offered. The slope changes, but the fundamental nature very rarely changes, right?
Yeah.
Here,
it's all over the place.
It's all over the place.
And it's a great signal. Like I haven't even looked at a chart, but we were hovering around 65 when I checked. And I was like, well, that's still skewed to the upside. Everybody's a little worried about breaking through 65. Now that it hasn't, the skew flattened from what you described to me. So people aren't as concerned about a potential breakout to the upside.
Let's look here, because we can actually do that here,
Yeah.
courtesy of our friends, Mr. Nick and his friends over there at Quick Strike. We can look at the puts and the skew here, the quick skew. Let's go out to June. So that's a little bit longer term. It's still only about 2 weeks away, but it's got a little bit. It's got also where a lot of the paper was going up this week. It was pretty much a good chunk of it. Looks like about over half the paper this week was in the June contract. So let's look there for a second. And the calls have let me pull this a little closer. It's hard to do. There we go. So the calls have come up a little bit. They were about 6.5% cheap to at the money, and now it's 5.5% cheap to at the money. And the puts are bid. The puts are 11% bid to the at the money versus about a little over 10% a week. So you're right. It has the puts are leading the dance, and they're getting more bid as we're talking here. So which you can kind of look anecdotally and see that in the vol as well. Again, that's why I like the commodities. They're fun.
It's a reactionary skew, which is very unique.
And if you had to guess, I'm going to throw out on a limb here and make you guess, Mr. Rhoads here. I'm going to give you a clue. We're threatening the 60 handle, about 62 or so in WTI. So if you had to guess, I won't make you guess the month. Let's just guess.
Just a
strike. A strike and call or put is leading the dance this week in WTI. Which one we think it is?
60 puts.
Yes, you are correct.
Round number.
See how I
well,
set
you
that
led
up
me.
for
You really gave me.
What a nice guy I am.
Yeah, that was an
You would
easy
not return the favor to me if it was the shoe was on the other foot. You'd make me guess all
guess
that
things?
on my own. But I'm a nice charitable guy. 60 puts doing nearly 30,000 contracts here in June this week. So clearly there's still a lot of interest and or concern at that strike. Over half of the paper coming in that. Let's look really quickly to see if all of that was opening or people taking someone. Oh yeah, a lot of that was opening this, but a lot of back and forth, as you might imagine here as well. The big day actually today, nearly 13,000 contracts on the tape today. So almost half of that paper coming in today's move, which is kind of interesting. So WTI lighting it up, Mr. Rhoads here. A little bit of fodder for your paper. And since you're my guest, you can dictate where we go next, sir. Which other areas of the commodity realm are you researching? What is fascinating to you, sir?
I definitely want to take a look at interest rates, especially because we're going back and forth as to whether we're going to get a hike, not a hike, or we're going to get a drop throughout, by the end of this year. That number keeps flipping around an awful lot. So I do think and when I say that number, it's from the CME FedWatch tool. I want to do a little work on. The FedWatch tool gives you an idea of what's being priced in by the options, but I don't think it necessarily takes the skew of the different expirations right after the different meetings into account, and I'd love to take a look at some of that as well. So that's kind of, I want to take a look at it, and if I find something, we write it up. But that's the next potential project. And then the third one, I want to try to do 3 before the year is over with. I want to look at what goes on in the options on copper. A lot of people don't. If you had to rank, I did this Tab now has a training division.
Really? I did see that. You're right.
I was at Ernst & Young last Friday talking
copper?
Well, I was talking commodities and options on commodity futures. And I said, I had them rank by volume, gold, silver, and copper. And gold's number 1, but copper's actually trades more than silver.
Copper's
I don't think a lot
2.
of people that don't watch the metals really realize that. They don't, because you'll get a gold and a silver quote on the mainstream media, but you won't necessarily get a copper quote.
They lump all the precious stuff together. They don't throw the ugly base metals, the production metals in there as well.
But copper is basically, I think, one of your best hedges against inflation, if that's what you think is coming around the corner. And I'd like to see, I'd like to maybe intertwine Fed policy, CPI, maybe even PPI, and what goes on with the copper options.
Since you're talking copper, let me pull that up here really quickly here as well.
You probably didn't think that was the market I was going to bring out.
I didn't. That's why I left it
being
open.
the free agent is so much fun.
I like to have the curveballs thrown up. We have talked copper a few times. Obviously, when people talk copper, they usually use it as a surrogate for China, right? The whole story is Chinese demand. What's going to happen there? And yet, it's the Chinese demand was kind of in the toilet for a while. Maybe we're hearing it's not so much now, but for a while there. And yet, copper options were surging. The volume, the volatility, the open interest. Every time you look a new record, it was kind of a weird disconnect. Because on the one hand, you're hearing China was pretty much in the toilet, and they're the big driver for a lot of this, and yet the volume was exploding.
Keeps going up,
So that was kind of interesting to see. A lot of people were asking us why that was the case. We had guys like Blue Putnam on here talking about some of their research in the copper realm. Because it isn't a huge options story, but lately it has been. This week is a good one as well, up about 9.5%. in total OI this week in the copper, even though we're still shy of that 3 handle, 278 coming into showtime, off about 4% here on the week. Let's see here if I can find what the big. Now we're talking obviously a little bit of an orders of magnitude difference here. We were talking about, what are we talking about, 20 some odd thousand for those other puts in the 60 puts in WTI. For the big trade out here of the week in copper, it was the SEP 310 calls, and they were about 1,174. So a little bit different, but still, percentage-wise, it's going up. It has been for quite some time. So yeah, I think there is some fertile. In fact, it looks like all of that was today. It looks like a funky 290, 310, maybe just a straight up. That's not a ratio though. It's all about 1,000 by 1,000 by 1,010. So straight up 3-way vertical there with interesting strikes. But yeah, that looks like that all went up today. That can't be a coinkydink. No. So not given that the day before they each did 60. So
was there any open interest on any? Is it possible there is some rolling?
That went up today. So unfortunately, like I chatted with our friend John Davidson at OCC, CME, the same issue. You have to wait a day. I said, why can't we get intraday updates?
If there was already big open interest,
yes,
you can
make
a guess. That's why
I don't have that at my screen at the moment, sir. You've asked me something that is beyond.
Look at that.
Look at you.
I've turned the tables.
Turning the tables, indeed. But yes, I could see if it was tomorrow, I could tell you what those opening and closing. But now I have to do some digging, and it's digging through screens. I find it's not conducive
very
to good audio.
possible if it's been rallying up that somebody rolled something one way or another.
Could be very much 3-legged roll. That'd be interesting. You see you see ratios usually too. No ratio there, so it's 1 to 1 to 1. 283, 310. I've seen weirder things, that's for sure. I've seen some funky stuff on the upside in gold of late. But copper, you're right. Copper, I think, merits more attention than it gets.
I wonder if it might be a good candidate for a volatility index.
The CVX, copper volatility index.
The COP ball.
Well, talk to the powers that be. See what you can get going, sir. In terms, you still have some contacts in that realm.
C.
I'll see. I'm still trying to get them to bring back the Russell and the volatility index. That they want that.
They've got the RVX, but they just don't have the futures or options.
That's I mean the actual listed tradable
that's
product.
Unfortunate.
Given how much Russell has been moving of late, and of course we have the Russell folks on here all the time, and they've been talking about how much they've been traveling the globe. I mean, Sean is still traveling the globe right now.
Yeah, he's not even here.
No, you're right. He's supposed to come here, and he's not. He's supposed to be here in the room with us right now, and he is somewhere else. So he's doing the road show, singing the praises of Russell Vol. But it's been moving. It's been happening a lot. We track that Russell VIX spread. I don't have it off the top of my head right now, listeners, but it has been around that 3.5 to 4.5 point range for a while. I know when it gets outside that bounds, particularly to the upside, you see a lot of interesting possibilities. When RVX used to be listed, that was when we'd see it light up, right? When that spread got very disassociated. Then we say, okay, bam, people are hitting it at one end, hitting it the other.
Hell, I was trading it.
Yes. It was.
I couldn't really talk about what I traded because I worked at SIBO, but I was always trading. I traded that. I did the very first VXN trade.
Oh.
I did the NASDAQ futures versus the NASDAQ Volatility Index futures versus VIX futures. Made a little bit of money off of it, and then never traded it again because there was no liquidity.
Yeah.
But I think I held them through settlement. Surprised that worked out.
That doesn't usually work out. So where else is your eye of Sauron landing in the commodity realm these days, sir?
The metals, the interest rates. Currencies are just so difficult to get excited about because the volatility is just so low.
There's a reason why we don't talk FX on this show every week. We try sometimes.
It's just kind of tough to do.
Outside of black swans of black swan events, there's not a lot lighting it up out there, right?
Well, I'm in the process of collecting all the data that I put together for a quarterly futures and a quarterly options report, and options on futures show up in the futures report. I'm going to take the last 5 quarters or so and get a pretty good handle on how much the Russell options on futures have been taken away from IWM options and from RUT index options, because both of those markets have just been bleeding volume ever since the options on the Russell futures got launched.
That is interesting.
Yeah, I don't think that people have just dropped off. I think there's actually been a shift in usage, because CME's done a really good job of educating people around their offering, and also made a big push as they brought the Russell futures and the options on Russell futures home where they belong at the CME group. So
if Sean were here, he'd have a single tier.
I'm doing this, and Sean's not even here to give me a big old bear hug.
But that is interesting. I was kind of wondering about that anecdotally, what kind of impact it was having.
I'm seeing it. I'm totally seeing it. It's When you take a look, index options in general in the first quarter of this year, and in the OCC option space, across the board was pretty weak. But index options, and it's not just SPX and VIX, it's RUT has also, in fact, on a percentage basis, been under a lot more pressure than the volumes in those two other markets. And I really do think it's volume shifting over to CME Group.
That's interesting. I'll look forward to hearing your full-featured, full-fledged report on that, sir, so we can see the data. But anecdotally, Absolutely. You kind of have to wonder, right? It's a direct product. You don't have to deal with any of the other issues.
I thought it was going to improve everybody. I thought it was actually going to help the overall ecosystem. It was going to tighten the spreads in the RUT options at CBOE because they were going to have a better futures market to lay things off in. I mean, I was trading Russell futures when they moved away from CME Group, and I stuck with them for about another week, and then I just gave up because the liquidity just went away. And it's back. It's totally back now.
Well, don't give up on our listeners yet, sir, because it's time to answer some of their questions in their futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to your feedback segment. This is the portion where you tell us what you really think about Russell. No, we'll save that. We'll save that for another day. Instead, let's get some of your questions here. We got a bunch of that's why I like the listeners. They bring us in all sorts of interesting directions here. Let's see. Equity rolls. Let's see. What's a fun one, Mister? Someone commenting about rates being too low. Maybe.
Well,
there could be an argument for that, I suppose. I don't know if I'm behind it, but
it's pretty interesting to see. I don't know. Rates just seem to have a mind of their own, regardless of what the Fed wants them to do.
I was at another event. Yes.
Yeah.
I was at another event recently, just a couple of days ago, and they had an economist there, and she was talking about in previous recessions. The Fed always had way more bullets in their arsenal because the rates were at least 5%, if not more. So they had much more they could do to the downside on rates if things took a turn for the worse. Here we are, 2.5%, somewhere in that range. And if things start turning, there's not a heck of a lot they can do on that front.
That's how you get to zero.
Yeah, exactly.
I think that's really what they were hoping to avoid, through trying to hike in moderation without upsetting anything. And time will tell if they were able to do that or not.
Speaking of upsetting, here we have, I can't even pronounce his name, Vodinich. He's a CFA. He wrote in with, we were talking about the soybean markets and how some of their issues, how they responded to the trade war news. This is from, I think, a few weeks back. He sent this in. And he just sent his response to how the soybeans market responded. I'll share this with you. It'd be kind of hard, listeners, for you to see it. His response was a nice animated GIF. I don't have the animated, but of a person jumping off a cliff. They are
cliff diving into a very narrow. Yeah, that ain't going to end well.
So apparently he was not exactly bullish on the prospect for soybeans.
I'm hoping that is photoshopped.
Yes, hopefully that is not him, and hopefully that is someone else there.
Although if it wasn't photoshopped, I know what he said just before he jumped. Hold my beer.
Yeah. Oh no, I should never have done this. I voted it Charov.
Or watch this.
Thank you for this. We got MCB saying he took Dogecoin profits this morning. Is that one of the ones you're holding? That's
not one of the four that I have diversified my crypto empire into.
Shall we say that's a very very thinly traded one. Dogecoin profit this morning. This crypto rally can't get much hotter.
Ooh.
Well, it was. I think they sent this in last week too, so that was kind of on the tail end of that rally.
I've never even heard of that one.
Maybe I think it's Doge. I think that's how you pronounce it. DOGE coin. Yeah, there you go. I think it's Doge. It could be the old school Venetian way, Doge, the old Doge. Dogecoin. I don't think
that would be worth 10% right there.
We're talking it up here on the show. It's gotta. It's got to drive it up
It's
here.
it's kind of like, stocks back in the day. You just added .com to a name and it was worth 50%. You just get something really exotic, really high-end sounding in the crypto space. It's probably worth another 10% or so.
Here's another one from not Litecoin, Lightcon. Maybe he spelled
I think
it wrong.
maybe that's
silly.
their opinion
Yes,
about
exactly.
the Litecoin.
Maybe, but he's not asking about crypto. He's asking about Brent. He says, "Why no Brent love on the show?" Well, a couple of reasons.
I'm here.
Well, yeah, you're here. You can talk about Brent.
Yeah.
But we normally talk WTI because that's where most of the volume is on the CME platform these days.
It is.
In terms of where, like, we can pull up Brent, but it's. I mean, maybe I could do it right now to see exactly how much, but it's a pale shadow of what we're seeing in WTI.
One of the things that CME has that's pretty cool, and it trades okay, is the WTI Brent spread.
Yes.
You can trade it directly. So there's some love for Brent.
Funny you should mention that because the very next question is from Barbary, who wants to know the Barbary Coast. I like it. What are your outlooks on the Brent WTI spread going forward? Will all this Middle East unease continue to widen the spread? Well, let's pull up the spread.
Where is the spread right now?
Let's pull it up right now and see where it is. I just had the same thought. Okay. It is at 783, so it's actually come in a little bit.
Yeah.
It was north of 10
That's what I
not
thought.
too long ago. Actually got up to not quite 12, but 1170 or so.
I wrote on it a while back, that first paper that I did for CME Group where we talked about a lot of different option strategies. I actually wrote on using the options on that spread. There's options that trade on that spread. And the historical spread, I think, was something like 2.5 to 7 or 8.
Yeah, 8's like
and
the
then I
upper
saw
band.
double
It had
digits,
been.
and I'm like, well, I'm glad I'm not trading that because I would have been on the wrong side of that
the
for a little
consensus
while.
from everyone was that it was going to tighten, right? It seemed like there would be like a cap on that spread, and then it immediately blew through that cap. The cap everyone thought was around 8.
It looked like an RSI chart. It had just, for those of you who use old school technicals, it really would look like a relative strength index chart where it just oscillated between a couple of extremes.
Yeah.
Looked like an easy trade, but the things that
hits
are
that,
range bound are really
yep.
easy trades until they break
It
out.
works until it doesn't, right?
Yep.
And then I'm looking here. You had threatened the 10 handle back in February, and that's kind of where. And it came close to it again back in March. But yeah, you're right. There's a lot of data. Looks like this is going to cap what's going on with the Saudis and the WTI. Obviously, WTI, if you're not familiar, listeners, is of course the more domestic West Texas Intermediate versus the Brent, the more international barometer for crude. So a lot of our audience here is more focused on WTI as well, which is another reason why we don't talk Brent a lot. But that spread, you're right, does get a lot of love. The futures trade pretty actively over there. We're kind of at the upper end of what that boundary used to be, which is around 8. We're at 783 right now, but as we have seen, it broke through, not just very recently, it was at 971 again, about a week ago. So
are we going to go into a wide WTI Brent, what we used to call it, regime?
a new regime, north of 10 for the foreseeable future?
That's our new range. If the range, you actually probably could say, if you went far enough back, that there were different levels of normalcy for that spread.
I'm sure if you got some of those guys trading the futures there, they come in and be like, this is the range here, and this is here, and this is where it usually is in this cycle. They have it all down to a science. So yes, I think we should talk Brent WTI a little. The Brent side of the equation for us is not as exciting, so that as a result we don't talk the spread. But the spread itself is interesting. I think there's merit to that. Well, all this Middle East unease, I think it's more the driver now is what's going on with obviously the sanctions in Venezuela and things. Because the Saudis actually, the Middle East has a chance to actually maybe step back some of their production cuts, and that could, of course, maybe get some of this crude that's coming off the market back in, which is why people are thinking we had a little bit of a ceiling on the near-term bullish run for WTI recently because the Saudis have been cutting, and they could put that right back in. And the amount they've cut was roughly equal to what the sanctions are taking out of the marketplace. So they could easily replace that if they were so inclined. Maybe not so inclined yet, but they have that weapon in their arsenal if they're so inclined. So I think the days of threatening like the 12 handle maybe are behind us a little bit, but I thought it was going to be bounded more to the upside to 8 as well, and then it broke through it. So
what I tried to do with that spread was I tried to look at it as a signal for trading crude, and you know what I found? Not a damn thing.
And you're the guy who would look for the research. If it was, there was something there.
It was worth looking at. That's I've just saved 12 people trouble.
12. But it is, as an indicator, I think it has a lot of interest. And that's where I think. Let's see, we got some lengthy ones here, Mr. Rhoads. I'm trying to wrap us up on a more. Here's one about charts, recent charts, supports, resistance, and crude. Some of these are way too long. How about this? Let's end on some. Let's actually do a two-parter. First off,
you know what the lesson is here?
What's that?
Ask short questions.
Yeah, it helps. So many people send in these treatises.
Well, no,
and we love it.
You would share them when I was on Vol Views. You shared them with me every week. I would. I mean, some of them.
You could spend a whole show with just one question.
If I'd had more time or had an intern that was able to do this, I could have turned them all into blogs.
Yeah. Or if you're paying me to do all your personal research for you and come up with a personalized strategy for you, which some people want. What is the answer to all of this in 2 seconds?
No, the more brief, honestly, the more, and I just know this from history of working with you, the more brief the question, the more likely it's going to get on.
Sometimes you don't have a lot of time. Today we do, but normally we don't. Let's see. Let's go with a couple here. First off, let's get a little bit of love here. This comes from Lachlan Comport. That's a good handle. He says, 5 stars for you guys. So you're the best options podcast, full stop. Well thank you, Lachlan. That's a little bit of love. But that makes up for having to look at Mr. Rhoads in person.
I was going to say, and we'll see if that if we go to 4.5 stars after this week.
There you go. Rhoads bringing us down single-handedly. Let's end on this one. It's kind of a fun one. This comes from Colby Alvarez. He wants to know, what is the weirdest print you've seen go up on this show? For your sake, Russell, I will expand it. I will allow you to think, what's the weirdest print you've seen go up in general? It could be vol, could be commodity option, whatever floats your boat. What's a weird print that really resonates?
It's a WTI print.
Really?
When the first time we ever got to 100, the bid ask was like, first time we were approaching 100, and all the people on CNBC were excited.
Yeah.
Because they had to add a digit.
Talk about something, right?
They probably on their board, they probably just got a piece of cardboard and wrote a 1 on it. But they were and the future was like, I don't know, 99.90 by 99.95 or something like that, and a 1 lot traded at 100 outside because somebody wanted to be the first person to trade it. Yeah,
and that was worth that to them.
It was worth the $5 or whatever.
Would have been great if it reversed immediately and just that one guy had that print at 100.
It sort of did. That happened, and they're like, it traded 100, and then it just hovered around under 100 for a little while, and then finally broke through that day. But yeah, that was just is it really worth it to be that guy?
Clearly,
it was a 1 lot at 100.
There you go.
It was so that was on the future.
That was definitely a guy being a jerk. Yeah. Here we go. Just to say he did it. You're right. In terms of the show, where's print we've seen go up on the show? I probably have to go back. I got to pull the exact strikes again. We named it as our strange trade of the year last year. It was that crazy upside gold fly that we saw go up. It was just so outlandish, the strikes. At the time, I think gold was around 1,300, and he was playing like 2,600 by 3,000. And it wasn't that long. It was about less than a year out, I think.
They had to thread the needle or something.
It was insane, just the amount of upside he was picking up, and these strikes that were ludicrously out of the money, nowhere even close to relevant, and the ratios. And I think he had a kicker at the 3,000 strike, so gold had to pretty much almost like 2.5x to get even close to that. And it was like, well, where is this guy? We've seen some gold bugs. We've seen some people who are very bullish gold. That took it to another level. Do you think maybe this person had hired a flying circus team of women to fly over Fort Knox and try to make the gold unreachable? Is he flying on with small planes that also spray some sort of canisters of very dangerous toxin in the air? You realize if Mark Sebastian were here, he would break into Goldfinger right now. He would probably would. You'd be muting him, but he'd be shouting Goldfinger. That might be a little bit before his time, though. I don't know. He's more of an 80s kind of guy. The references from beyond, early Bond, I don't know if that's his... Everybody knows. But everyone knows Goldfinger. That is true. That is a good one. Oddjob, come on. How do you get better as a Bond villain than Oddjob? I put it out there to you listeners. Who's Oddjob would be the best guest ever. Yes. You'd make my job very easy or perhaps very hard because I would have to carry the whole show, kind of like I'm doing now. So I'm gonna have to wrap it up there, listeners. Thanks for putting up with our fun live on the fly episode of TWIFO. Before we go, Mr. Rhoads, you're working on all sorts of cool stuff in the futures, options, and commodities realm. If you want to leave us with a little bit of a hint, a little bit of a tease of what you got coming up, and also if listeners want to check out more of what you're working on, maybe they want to be trained by you. Where should they go? You're better at marketing me than I am. It's like I've done this once or twice. So I'm with Tab Group now. I'm head of derivatives research. A good portion of what I do goes out on the Tab forum. I will tweet what I put out there, but instantly I get hammered because you do have to register for the website to have access to things that I write up there. I tweeted out from here a few times, and I got a slew of, will you please start writing about volatility again? So I think I'm going to start doing a weekly volatility recap on
and send it out with a newsletter that we send out on Saturday mornings.
It's like people like volatility or something.
I've been told that I'm missed.
Well, there you go.
There's 3 people that really miss me.
It's nice to be missed. There's no one in this room, but it's nice to be missed. I'm sure someone out there. Clearly, our producer is raising her hand, but she's
she
lying.
waved at me.
She is lying, listeners.
I didn't think she listened to us at all. I think she was just tuning us out.
She does a good job of tuning me out. Let's just put it that way.
I have 3 women at home that do that to me on a pretty regular basis.
So you're trained well
and
as well.
Then, as you mentioned, Tab Training, which is I think it's like training.tab.com. It's a funny website that we got for that. But we've started a educational division. We do custom classes. I think I'm probably going to put together, when I finish the next VIX book, I'm probably going to put together like a 1-day volatility intensive that we'll teach in New York at our classrooms there. But I've done a custom class for one of the big auditing firms so far, and we're doing a 3-day derivative intensive in the second week of June. First day is forwards and futures, second day is options with a little bit of volatility in there, and the third day is swaps. Exciting stuff.
It's like you're back at the Institute all over again, sir. Just educating those folks.
I'm back in the classroom, but I get to talk about a lot more stuff, which I really do enjoy.
It's good to see people out there carrying the mantle of education and training, sir. So the Tab Group for all. Oh, you mentioned, are you doing another VIX book? What is this one going to be on?
I'm writing.
What's left to be mined?
I'm about halfway done with the next VIX book.
Give us a tease.
Well, it's very much of an update from the first one. Don't buy the first one. Sorry, Wiley. Well, it's just so old. VXX was the only thing out at the time. So there's a lot more about VXX. There's a lot more about more volatility indexes than just VIX. There's more about how to use volatility indexes and skew as an indicator. And then there's a couple of consistent volatility strategies that I explain in full. So,
and when can we look forward to that?
About 2 months ago. So this summer.
What are you doing talking to me?
Well, no,
you got a book to write.
I know. I've been teaching. I taught at Loyola. I've started a new job. Loyola semester just came to an end, so now it's time to get the book and the dissertation done.
All right, check them out, listeners, over there at Tab Group.
Tabforum,
I should say.
That's the free spot.
Tabforum.com. You can check out, register, get all of his good research there. And, of course, check out everything Nick and his team have to offer. CMEGroup.com/TWIFO, TWIFO is the easiest place to go. Or quickstrike.net, QUIKSTRIKE.net. Kick the tires and light the fires, as you like to say. Check out the dark mode. Nick will be very excited about that. And, of course, Mr. Sean, hopefully will be back in the studio with us next week. He's hither and yon somewhere. If you like all that research they have about active versus passive, spoiler alert, maybe that wave is cresting a little bit, at least with some of the data we saw at the conference with single name options outpacing equities and indices. Maybe that worm has turned, Mr. Rhoads.
The equity option space is almost flat year over year on volume. And indexes and ETFs have really kind of taken it on the chin.
Yeah, it's interesting.
A lot of people spend a lot more time in individual names.
Someone out there is doing some stock picking somewhere, so that's interesting stuff. Check it out, FTSERussell.com, or give them a follow over there on the old Twitter machine at FTSERussell for all that good data as well. And on behalf of Mr. Rhoads and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for all the fun stuff that you do. Keep them coming. We should be back live next week, and we'll see you then for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.